Many clients ask us, is Cyprus a good place to base a company living and working abroad? Well, my answer to that is it depends. Now, if you're a very big company with large turnover, the question is absolutely yes, because you've got a 12.5% corporation tax, although the global financial community for tax under the OECD regulations based in Paris are trying to introduce a minimum tax rate of 15%. Cyprus are not applying that as a corporation tax yet. They're still charging people 12.5%, and that is the rate that currently applies going into 2024 with a calendar year tax year. So it can be a very efficient place to run a corporation. But if you're running as a contractor, a personal service company, the situation is slightly different. All Cyprus companies need an audit. They've changed the system slightly this year, so the requirements of the audit are not a full financial audit as if you're a £100 million turnover company a year. However, there's still an audit process, expense in terms of record keeping, software, accounting, and after all that you've still got to do the audit to get your tax returns in. So it is more expensive to run a Cyprus company to pay the 12.5% tax than it would be in any other jurisdiction around the world that require audit. In the UK, you can have a company with turnover 5 million before you get into audit. So it's a lot simpler to run a company, although you've got a higher tax rate. Currently, it's 19 or up to 25%, up to April the 1st this year. So any company with a tax year that ends before the end of March 24, subject to the next budget, has got a 25% corporation tax liability, which can reduce down to 19% if it's below 50,000 net profit. However, if you're a personal service company, and if you've got a very low cost company in a low corporation tax jurisdiction, you can then be taxed in a different way. And if you're unable to get dividends paid to you as a Cyprus tax resident of your personal service company, which is in another jurisdiction, the tax on the dividends for you being tax resident in Cyprus or for not remitting income into Cyprus is zero. And that stands up under double taxation treaties against other arrangements with other countries around the world. So an expat who's working remotely as a personal service company operative, and with that company not necessarily in Cyprus, can avoid the costs of an expensive company management in Cyprus and still enjoy a dividend tax of 0% and relatively high personal allowances and low maximum rates of tax. And if your contracting is done abroad in the Middle East or Africa or Asia, remitted income is also not taxed in Cyprus for a tax resident living and working abroad for a certain number of days a year. Lots of issues, lots of potential tax savings for tax residents of Cyprus who are still working, and to find out ways to maximise your capacity to operate from a personal service company as a Cyprus tax resident, contact us at proactpartnership.com.